Greetings and Happy New Year, everyone, and welcome to the Argonaut monthly video covering December 2024. Well, 2024 was another good year for Argonaut's funds. The Argonaut Absolute Return Fund achieved its sixth year in a row of double-digit returns, which is a unique feat amongst the 10,000 or so funds in the UK and European fund management industry. In fact, 5 years was also a unique feat. Our long-only fund, the newly launched Flexible Fund, has had a very strong start and currently ranks first in its sector since launch. Now, every successful fund requires knowledgeable and patient investors who understand what they have bought, what role it plays within their portfolio, and have also sized their investment appropriately. So we must thank our unit holders for their commitment to the fund. Now, a thorough review of Argonaut Fund annual performance and attribution will be available on our fantastic new Argonaut website, where investors in Argonaut funds can register and gain access to a whole smorgasbord of additional information behind a client wall with appropriate compliance checks. I would encourage all of our investors to register on argonautcapital.co.uk. Fundamentally, the vibe shift is a return to a championing of reality, a rejection of the bureaucratic, the cowardly, the guilt-driven, and return to greatness, courage, and joyous ambition. Now, whilst December was a quiet month for financial markets, this vibe shift, which began in America, physically expressed through the joy of an orange 78-year-old shuffling to the soundtrack of YMCA, has, according to eminent British historian Neil Ferguson, already gone global. The crude way to think about this is just geopolitical physics. The American electorate decisively re-elects Donald Trump, the German government falls, the French government falls, the South Korean president declares martial law, Bashar al-Assad flees Syria, there's an economic chain reaction to Bitcoin rallies, the dollar rallies, US stock rallies, Tesla rallies. Meanwhile, the Russian currency weakens, China slides it deeper into deflation, and Iran's economy reels. So let's have a look at that Chinese deflation. Some of you may remember our somewhat skeptical bear in a China shop video in early October after China had announced its latest economic stimulus. In October, the yield on the 10-year Chinese government bond was 2.2%. Since then, the yield has collapsed to an all-time low of 1.6%, implying acute concerns around the deflationary bust ahead. So much for game-changing stimulus. When will governments all over the world learn that sustainable economic growth is impossible without political freedom, and that government is worse than the world's worst fund manager at allocating capital? As Ronald Reagan, the 40th US president, said,
9 most terrifying words in the English language are, "I'm from the government and I'm here to help."
We might compare this to the success of the supply side reforms in Argentina from President Milei, who has cut government spending by up to a third in just 12 months, where the Argentinian economy is emerging from deep despair into what we believe will be a sustainable economic boom. Argentina's stock market doubled last year, and we believe it can double again this year. We will talk about this in more detail next month. But the Pliego-Ferguson vibe shift is as much an anathema to Europe's political class, aka the Uniparty, as it is to Asia's axis of upheaval. Just as the vibe shift could see revolution in the East, as in 1989, it must also see regime change sweeping away the status consensus in the West, as in 1979. This will be worth watching in 2025. Let's imagine we can categorize all investors as following a type of science: the biologist or the physicist. The physicist has been taught to believe in universal laws, precise measurements, and mathematical modeling. The biologist understands investing to be more complex, relying on observation, qualitative methods, as well as data, understanding that the rules of the game evolve. In contrast to the physicist, who has a static view, the biologist understands and embraces change. Whereas the biologist has tenure because they are not dogmatic in the face of a disagreeable market, the physicists, who are more numerate in number, are often right once and end up being stubbornly wrong. This time of year is nearly always filled with siren calls from fund managers arguing for mean reversion in performance. It's time for my dogs to bark, announces the frustrated physicist every January. His confidence in his measurement of value unbounded. When his physics fails, his investment process morphs into an even more dismal science based on cursed bad luck and Buggin's turn. The biologist, on the other hand, will first ask how the investment climate is changing and likely to change further or better for the worse before ascertaining the value in any investment. European stocks have significantly underperformed US assets. However, whilst European assets have underperformed, this is not by itself a good reason to buy them. We could point out that the other 493 stocks in the S&P 500 have significantly underperformed the Magnificent Seven. It is amongst these 493 stocks that we see the best opportunities in US equities. The catalyst for this is not only the valuation difference, but President Trump's economic agenda, which will favour the 493, not the Magnificent Seven megacaps. Now, many in Europe think that economic and political crisis will be a catalyst for positive policy change. We disagree. Mainstream political parties remain clueless about the causes of the malaise, never mind having the backbone to effect change. So no solution will be easily forthcoming without new political parties offering a complete rethink. Whereas Trump promises further business deregulation, smaller government, lower taxes, and cheap and reliable energy, in an act of economic euthanasia, policies in the UK and Europe continue to advocate exactly the opposite, its political class doubling down on failure. We noted last month the triumph of Donald Trump in the US presidential election would not only extend US economic exceptionalism, but would serve as a beacon of hope to those of us in the UK witnessing the economic and cultural vandalism of our once proud nation. The UK Labour government seemed to realise the need for investment to drive economic growth, but crucially, they don't seem to understand that unlike charity, the nature of investment is reciprocal. Capital demands a return in the form of profits. And in their words and actions, the new Labour government has already created the impression that the UK is now a non-profit organisation. Or to be exact, the profits of the productive private sector will be indefinitely skimmed off to pay for the unproductive private sector until there is no profit left to skim. Sensible capital should run to the hills. Britain's swollen and entitled public sector will continue to crowd out real-world growth as it becomes an even bigger burden that the private sector, like Atlas in Greek mythology, must carry on its shoulders. But capital can just shrug and move elsewhere. In contrast to Trump's deregulatory instincts, the Labour agenda will only accelerate the reallocation of capital in the UK from the productive to the unproductive economy, with the result being economic paralysis. Now, cultural differences between the US and Europe also work against us. A recent stock market study has demonstrated that America currently has 242 companies less than 50 years old with a current market cap above 10 billion, grown from scratch, i.e. without major acquisitions. Europe, including the UK, by the same criteria, has only 15. Why is this? Well, America celebrates its entrepreneurs, seeing their success as a triumph of free will. In the 19th century, Britain similarly celebrated its engineers in the Industrial Revolution, in the same way as it had previously toasted its sea dog privateers in the Elizabethan age and its navy admirals. But big government has since spawned a dependency culture which has drained us of our national vitality. We are now inclined to see virtue only in victimhood and frown upon entrepreneurial success as exploitative, with the increased power of the state justified as a unique mitigator of this can't-do fatalism. This has to change if the UK and Europe wants to see private companies and economic growth. Now, whilst we have no doubts that UK fund managers will continue to be bullish on UK stocks, whatever the weather, we wonder what serious capital that has the choice of investing elsewhere will want to put their capital at risk under the current political regime. Now, the good news is that Argentinian President Milei has shown what can be achieved with the right policies and political determination in a short period of time. Show us a British Milei and we will become patriotic investors. But before 2029, we have a lot of things to worry about. Higher political uncertainties around currencies, tax, capital controls, and ultimately property rights.